Ladies and gentlemen, brace yourselves as the U.S. stock market is experiencing a tumultuous ride, with volatility reaching unprecedented levels. Investors are reeling as President Trump's aggressive tariff strategies send shockwaves through global markets. The S&P 500 briefly dipped into bear market territory on Monday, mirroring the Nasdaq Composite's 20% fall from recent highs last Friday. The Dow Jones Industrial Average is teetering on the edge, reflecting the market's fragility. The CBOE Volatility Index, or VIX, skyrocketed to a 5-year high of 46, underscoring the market's anxiety. Financial experts are urging caution. Ken Fisher, founder of Fisher Investments, which manages $295 billion in assets, emphasized during an interview, "You never sell in a panic. You never ever sell in a panic." This sentiment is echoed by Fidelity's analysis, highlighting that missing just the 5 best days in the market since 1988 could cost investors over $264,000 in potential gains. Historically, severe downturns have paved the way for substantial growth. During the global financial crisis from 2007 to 2012, portfolios that maintained a 70% stock and 30% bond mix saw significant recoveries within 52 months. Jim Paulson, former chief investment strategist at Wells Fargo, advises it's good to buy in times of fear like this. This is when the risk is probably less and the upside is greater. However, the current tariff disputes add layers of uncertainty. China has firmly stated it will fight to the end against the U.S.'s escalating tariff threats, refusing to accept what it terms the blackmail nature of the U.S. stance. This intensifies fears of a prolonged trade war with global repercussions. Financial leaders are sounding alarms. Larry Fink, CEO of BlackRock, warns that stocks could plummet an additional 20% due to high tariffs and mounting inflationary pressures. He notes that many CEOs believe the economy is already in a recession. Federal Reserve officials, including Jerome Powell, acknowledge the inflationary impact of tariffs, suggesting that these effects could be persistent. In the corporate realm, companies are making strategic moves amidst the chaos. Broadcom announced a new $10 billion share buyback program, signaling confidence in its future despite market volatility. Meanwhile, Infineon Technologies plans to acquire Marvell Technologies' automotive Ethernet business for $2.5 billion, aiming to bolster its position in the semiconductor industry. As the market navigates these turbulent waters, investors are advised to stay informed and consider long-term strategies. The unfolding trade tensions and their economic impacts remain critical factors to watch in the coming weeks. Thank you for tuning in. For more updates on this developing story and other financial news, please subscribe to our channel. Don't forget to like, share, and comment below with your thoughts on the current market situation. Stay informed, stay ahead.